Hello and welcome back to Bull Street, and today we're going to be talking about Energy Transfer, ticker symbol ET. Energy Transfer is a midstream oil company. Midstream oil companies are in the industry of transporting and storing of oil. Oil companies typically pay a higher dividend and typically have a slower growth than the S&P 500. Energy Transfer has been looking into renewable energy. They have been trying to acquire solar farms and wind turbine farms. The current price of Energy Transfer is sitting at $902. This is much lower than pre-COVID. We can see it has a PE ratio of 6.65. This is good, and the average PE of the S&P 500 is sitting at around 34.59. So this is a much lower and better value than most companies in the S&P 500. We can see the historical average of this company. We want to analyze the historical average because some companies never have that high of a P/E ratio to begin with. However, we can see before COVID, this company was previously sitting at close to a 15 PE ratio, and it has even reached close to a 24 PE ratio. So a 6.8 PE ratio is a very discounted price for this stock. Now here we're looking at the income statement, and we're looking at values all over the place. So within net sales, it has been fluctuating quite a bit. However, with revenue, it has been continuously increasing, except for the year 2020. The year 2020 saw oil prices dip, as well as saw industry have some parts shut down due to the coronavirus. We can also see gross profit has been continuously increasing, and even in the year 2020, when revenue was down, they still had a quite high gross profit range, close to the 2019 range. Now we can look at the chart and analyze it a little bit more. So within the 1-year chart, we saw lows close to 5.5, and we saw peaks at around 1135. 902 is a little bit higher than the 1-year average. Looking at the 5-year average, we can see that the price has significantly dropped, especially from the pre-COVID, where it's sitting at around $13 per share. We saw prices even reach over $20 over 5 years ago. However, a comfortable price should be at $12.59 for recovery. This is quite a significant drop. Now we can compare this to the S&P 500. The S&P 500 has seen a similar dip within the 2020 range. However, it had a really high recovery, which Energy Transfer has not yet seen. Comparing this company to the S&P 500 might be a little bit more unfair though. You might want to compare this company to other oil companies such as Exxon or Chevron. Now this company closely matches the price of oil. So we have here a US oil fund in comparison to the company Energy Transfer. And every time oil continuously increases, Energy Transfer as well increases. And we can see a very consistent pattern here where Energy Transfer is really lingering around the oil range. And so if the price of oil increases, this company will also increase. Now looking at the dividend, this company pays around a 15-cent dividend. However, this was decreased in 2020 when they had revenue cuts. They were previously paying around 30 cents. So the dividend could be potentially higher in the future once revenue picks up again. This would have to have the price of oil increase. I made a quick chart here to show what would happen if you invested around $900 and owned 100 shares of this company. This company pays 0.1525 cents per quarter, and at the share price of 902, if the share price remains stagnant, you're still looking at a profit. So you would still be looking at a 6.76% profit within a year. And this is without dividends reinvested. However, within 10 years, you're looking at a 67.63% return just on dividends alone. If this price increased to previous levels of $12.50, we would be looking at, if this price hit within 1 year, we would be looking at around a 45% gain or a 200% gain within 10 years. And again, this is with dividends not reinvested. The share price could even drop down to $8.50, and you would still be looking at within 1 year a return. So the share price would have to go below $8.50. If you're buying it at $9.02, the share price would have to go below $8.50 in order for you to lose money within 1 year. So if you believe that oil might go down or energy transfer might reach below $8.50, then you're going to be looking at a negative return within 1 year. However, if you think that returns and the share price might go up to previous levels or even higher, Morningstar on the Robinhood app is estimating that the share price should be around $18.50. $18.50 might be quite a bit high, especially because pre-COVID levels it was sitting around a $13 share price. But most analysts are saying that the share price is going to increase. And on the most conservative side, they're saying that it's going to sit around 908. And a 908 is still a profit on capital gains, and you will be taking in that dividend. Ultimately, this is a stock that I would recommend. If you like this video, please like, comment, and subscribe. And please comment down below what company you think I should do next. Thank you.